What can we start off with?
Craig's hair.
Is that your biggest surprise of 2023 is my hair?
Yeah, I want to see the ponytail in the next podcast.
So I think that started back in October when you decided you weren't going to cut your hair. So can you turn around here? I'm just curious how it looks.
Let's just leave my hair out of it. Let's focus on what people want to listen to, and that's probably the topics of the day.
Without further ado, this is episode 11 with Craig White up in Kelowna and Clark Linton down here in Vancouver, along with myself, Jay Snyder. We've got a year in review podcast, so we're going to look at what happened last year, what transpired, what stood out to us, and then make some bold predictions for the year ahead as we sit here January 16th, 2024. What are we going to remember 2023 for? What stood out? What were some disappointments, surprises? What are we going to remember as investors in 2023?
I think one of the biggest surprises for me, and if we roll back the calendar a year, we entered 2023, you look at the headlines, there was hardly any talk about AI and, the likes of ChatGPT. And as we got into the spring of last year, how quickly that theme emerged. I mean, for me, it almost came out of nowhere. And you look at how quickly that's been rolled out, how large the uptake has been on that. It's been remarkable how that technology has just been embraced and how effective it's been for some people and some companies. I think resulting from that, kind of the market effect of that is when anything that big and that important comes out, so quickly, the market embraces it. It becomes a theme that people rush into and follow. So, big surprise was how narrow the market's gains were last year with, what's referred to as the Magnificent Seven. So the Microsoft, NVIDIA, Amazon, Google, those that are focusing on that theme or have a large component of their business or focus, really represented 70%. Those 7 companies, about 70% of the S&P 500's return last year. And from the numbers that I've seen, 90% of the S&P 500's return last year is attributed to that AI theme. So that was probably the biggest surprise for me last year.
Yeah, that's for a lot of those names you mentioned, that's coming off of an extremely challenging year in 2022 when you saw a pretty good retracement on share prices for those exact same names. So certainly, once that AI theme, and maybe whether it's a theme or if it's something that's more structural, more of a secular trend that we're seeing, which I'm leaning towards the latter on that. From March, April, May, you really saw, a strong move, as you said, Clark, for those names. And, most of that, most of the broader market gains came in the fourth quarter, which again is a testament to, having the patience as an investor. And once again, seeing that returns can be lumpy. We went through the second and third quarter, which for a lot of investors, it felt like a challenging period because it was tough to find gains where, it was back end loaded, where November and December, in particular, November was one of the best months we've seen going back to 2020. So it's a testament to being a patient investor and, allowing good companies to perform. And it's not always a straight line.
And Jay, you asked about disappointments, and I think in line with what Craig said there, and what I said that, primarily the market's gains were driven by the Magnificent Seven or this AI theme. Biggest disappointments was the performance of some of the other stocks in the index, or here in Canada, if we look at, telecom stocks, utility stocks, bank stocks, historically, some of the better, more consistent performers in Canada, highest dividend payers. As a result of money flowing into those other, more narrow sector theme, and as a result of, rising interest rates over the last year and a half, the significant underperformance of those good quality investments here in Canada, that's a disappointment. Geopolitically, I think the Hamas-led, attack on Israel obviously was a huge disappointment, not just for the, violence associated with it and what's come as a result of that, but prior to that, we were entering a period where it seemed like relative stability in the Middle East. You had Saudi Arabia looking to negotiate a peace deal, I think, with Israel. And I think by no surprise, probably backed by Iran wanting to destabilize that process. I think, it's a huge disappointment, but I think going forward, it's a disappointment that I think it's led, to more geopolitical issues and instability in the world. And I think that'll be a theme that continues in 2024.
Yeah, and going back to 2023, I think some of the surprises that we continued to see was the strength in the labor market, the resilience of the housing market. There was a bombardment of recessionary calls that many analysts, many smart people were forecasting for 2023, and it, based on the economic data that we've scanned through, it's I would say that a softening economic environment is a better approach than a recessionary environment. We haven't seen it materialize. Canadian, and we talked about this in one of our podcasts, Canadian GDP data had softened in the second and third quarter, but we're certainly not in contractionary or negative GDP print right now. As I mentioned, the resilience of the housing market. What's that?
We'll see. It seems like Canada, I mean, the fourth quarter numbers haven't come out yet, but wouldn't surprise anyone if we saw another negative print in GDP here in Canada anyways.
But I think that the deep-rooted recessionary contraction that a lot of analysts were calling for, I think we can agree that didn't materialize or hasn't materialized as of yet.
Yeah. I would say
we've seen a little bit of weakening, but I think it's more indicative so far of a soft landing, than a harder landing.
Yeah. I think what stood out for me kind of along those lines with you, Craig, is the market psychology that played out and the human behavior that is so dependable when we go through bumpy markets like we went through in the late kind of summer, early fall this year, where the markets fell about 10% across the board, and all of a sudden you get the same clients expressing concern about further downside, the same market pundits and doomsday sayers coming out and crying chicken little, saying the sky's about to fall, expecting the worst case scenario to unfold. And then even rewinding back to January, where you looked at most strategists' forecasts for the year ahead, and it was, things are going to be extremely volatile. The continuation of 2022 downside is going to play out again in 2023. And there was just so much negativity and pessimism around the markets and the economy. And as we know, when there's so much consensus on one side, whether it's positive or negative, when sentiment shifts to extremes, you can almost guarantee that the opposite is about to unfold. And that's something, if you go back and listen to our first podcast from January of last year, we were really cueing into is just how much negativity, how much pessimism was out there in the market, and how much of that was already expressed in the downside that we saw in the markets in 2022. And really that was an opportunity. And we saw that play out through the year, where human behavior, just our natural instincts are to see the market falling, to see negative headlines out there, and to expect the worst to continue to unfold, where being good investors, you really have to recognize that short-term negativity as real long-term opportunity. Yeah,
well said. Yeah. Well, it goes back to like you said, Jay, how much of that was already priced in, right? It's now as we're going through this podcast, we're right into the heart of fourth quarter earnings season. So we'll see what forward guidance is for S&P 500 listed companies, and so far it's kind of been a mixed bag. So that's kind of what you've gone through this somewhat of a market rally for the end of 2023. You're seeing a little bit of profit taking the beginning part of this year so far, but do we continue to have some of these tailwinds that set the stage for that fourth quarter rally, such as inflation has peaked, such as the end of this interest rate tightening cycle, such as soft economic landing, such as earnings are probably not coming in as bad as many anticipate. So again, we're not uberly bullish, but I think we're cautiously optimistic that what we've seen unfold over the last couple of months can't persist for the remaining couple quarters going ahead of us.
I would say, like, the sentiment right now, we're not at an extreme. We're not at a euphoric stage. There's still a lot of concerns out there. The proverbial wall of worry that the market likes to climb is still definitely out there, whether it's geopolitics and all the other issues that you kind of just mentioned that people are humming and hawing about. So definitely some hurdles to overcome for the year ahead, but by and large, I think we're in a fairly Goldilocks kind of economic situation with reasonable unemployment numbers, reasonable economic numbers, decent earnings on the corporate side of things, and it kind of is a decent brew for the market to move forward under. One of the other disappointments I was just going to bring up is I think here in Canada, and this is something we've lamented a little bit on the podcast and in our writings to clients, is kind of current Canadian immigration policy, which just seems to be so opposing what the country and the economy really needs, which is a better housing market, right? We all as Canadians, and particularly those of us with kids and people that are going to at some point in the near future need a place to live. And we've got a growing homeless population. We've got issues in the Canadian kind of social fabric, whether it's the healthcare system or just the job market. And we really need some relief there. And it seems like as we face all of these challenges here in Canada, we've taken on a new immigration policy that has increased the number of people coming into Canada. And I don't want to sound xenophobic at all, because I think Canada does need a healthy amount of immigration, but we've moved our immigration policy to such a level that it's adding to the problems that I think are front and center for most Canadians at a time when we continue to build far less houses for Canadians as a whole. I think the maximum number of houses that we've built in history is something like 250,000 houses in a year. Yet our current immigration policy is bringing in over 1 million new people to the country a year. So you kind of wonder how that can continue to be our best policy, and how we can expect the economic performance of the country to continue with that kind of being considered.
But it's sorry, go ahead, Clark.
I agree with your sentiment completely there, Jay. And I think it goes beyond housing as well. I think one of the issues in Canada is going to be, you think about infrastructure that's required for that increase in population from immigration. Again, it's not just housing. Think about the building of schools, hospitals, transportation. We just don't have the infrastructure in place in a lot of places to deal with the current population, let alone, 1 million new people per year. I think we continue to create a long-term problem, trying to solve one problem, but as a result of trying to solve that problem, we create other problems along the way. And I think that's going to be a big political focus here in Canada. The positive maybe is the Liberals are starting to get it. I'm not sure if you both saw over the last few days, they're looking at scaling down the number of foreign students they allow in, specifically because of that problem. That's shorter term, mostly rental housing, but they're starting to recognize that that's an issue as well.
Well, there was a really good article that came out earlier this week, and I believe it was written by National Bank, and they titled it Canada, I think, falling into a population trap, I think is what they talked about. And within that, they quoted Chrystia Freeland, and she came out, earlier this year or last year and said that, Canada has the social capacity to welcome all these immigrants, which, as you said, Jay, was over 1 million people in 2023. But I think the bigger question is, do we have the economic capacity to absorb all these new people? Our population growth rate was 3.2% in 2023. That's I think was 5 times higher than any other OECD country out there. And whether it's housing, infrastructure, healthcare system, again, I think that's the bigger question. Do we have the economic capacity to absorb this immigration at the pace that it certainly has been over the past few years?
Well, you can imagine as well, like the economy takes a turn for the worse, and all of a sudden you see unemployment rise, and all of these, unskilled immigrants are going to be looking for jobs, and they're obviously all of a sudden going to be not such contributors to the economy as they are now. I mean, not the whole, but a big part of the justification for this policy is that we need to fill unemployed positions. We need to fill job positions, and that's been all well and good in an economy that's growing and recovering, albeit slowly. But what if we do go into a 2-year downturn where the economy starts shedding jobs and all of these newly immigrated people have nowhere to work and are struggling with a place to live? I mean, this is just such a brewing kind of longer term issue, like you said, Clark, that's really aimed at solving a short-term problem of filling job openings without much long-term thought, it seems, at least to a lot of people at this point.
Yeah, and that's, we'll talk about this later in the podcast, but that's where I think you're going to see a pivot amongst current governments and some of their policies that they've adhered to over the last couple of years. But we'll talk about that in a bit.
So I think let's look at how we did last year with our predictions. We all kind of put forward some ideas of what we thought was going to happen in 2023. So we went back and checked the records, and we got a lot right, not everything, but I think we were pretty good. So starting with Clark's predictions, he had 3 things that he put forward. He suggested inflation has peaked and CPI would get back below 3%. I think that was mostly right. We're not quite back below 3%, but inflation certainly trended lower in 2023, so we'll get a gold star there. He definitely couched this one a little bit, but deflation would be back on the table was a call that was made, although not for 2023. I think we'll because of the criteria he set for that one, we'll maybe give him a pass there, but that could be a 2024 story. We'll see what he has to say about the year ahead. And then last but not least, international and emerging markets would start to outperform. Unfortunately, we didn't see that. We saw the US market was definitely the strongest market last year relative to EM and all major developed markets. So this is it. That's been a trend in place for a long time. The US market just continues to be the strongest performer, although I will remind most investors and clients that that's not always the case. Back in 2000 to 2010, the US market had almost nothing to show for a decade. And emerging markets, international markets, Canadian markets were all very, very positive over that decade. So a good reminder that we want to still maintain some global diversification, as it can help over long periods of time. Anything you want to comment related to your...
Yeah, well, I think that if you're going to be the teacher here and either gold star or red check me or whatever it might be, I've got to be in a position to defend this. So I think I'm not exactly sure if I said inflation would be below 3, but I said I think it would be back in the central bank target of 2 to 3%. Inflation, the latest reading is for November in the United States is 3.35. In Canada, it's 3.1. I would say that's pretty bang on. The comment about deflation was that the D word would come back towards later in the year, but I didn't think deflation would be a focus until maybe this year or next. The D word did come back. I think inflation is still positive, primarily because of the service sector. But if we look in consumer goods, we are seeing deflationary focuses there. Software and accessories last year were down 10%. Furniture was down 10%. Outerwear down 6%. And a lot of consumer goods, we have seen deflation. And that is, again, that D word is coming back into the conversation. So I think that's something that we have to be aware of going forward. If we do see some price pressures downward in the service sector, which may be more difficult because that's labor cost, labor focused, but we're definitely seeing deflationary forces out there. I think energy down 24% last year. The cost of energy down 24% last year. So definite deflationary trends in certain parts of the economy. You mentioned international markets. You're absolutely right. The S&P 500, I think, up 24% last year, if I'm not mistaken. Dive down a little bit just so I can defend myself and maybe say I was right. But we all talk about, okay, well, the S&P 500 was up 24%, but attributed to 7 out of the 500 stocks. The S&P equal weighted index up 14%, I believe. If you look at the developed market index internationally, up 24%, and the MSCI World Index ex the United States was up 18.6%. Where I got it wrong was emerging markets were not strong performers. That was primarily driven by the Chinese market, which accounts for a large part of that index being down 10 or 11%. I think the other thing I mentioned there was as a result of some inflationary pressures coming off and interest rates coming down a bit, we'd see long-dated assets, that's long bonds, but also the technology sector outperform. And I think that was definitely what happened last year, particularly in the technology sector with more growth-related companies. So there's my defense. I think with most of
Defended
those,
pretty well, defended pretty well.
we got it pretty right.
Yeah.
Just wanted to
Well, I think
elaborate.
the inflationary, that I don't dare call that easy, but given how aggressive central banks were, it was easier to make that call that inflation was going to come down, right? I think we can agree with that.
I'm going to disagree with that. I think if you were to go back and read the headlines at this time last year, we had inflation running at 7 to 8%, I believe. And you had the consensus believing that inflation was here to stay. Interest rates would continue to move higher. That was a consensus a year ago. And I think the call that I made was contrarian. And I think the magnitude of the call to see inflation back pretty much in the central bank range of 2 to 3%. I think even you guys at the time kind of batted an eyebrow a little bit, thinking, really? And we're back down really where they target inflation. I think that was not a consensus call a year ago.
All right, moving on to Craig's calls. We had a couple calls here from Mr. White. Cryptocurrency expected some continued unraveling there. Unfortunately, we can't give you a gold star for that one. We did see Bitcoin and every other internet money see some pretty significant gains. Not really our bailiwick, but that was something that surprised many. And then we had a call for a renewed focus on traditional energy production, which we definitely saw in spades this year. A lot of the Canadian energy producers are producing significantly more oil and gas this year. The US is exporting record amounts of LNG and continue their push towards a robust energy production picture. And then I think one of the things that surprised a lot of people and something we've certainly been welcoming is the kind of renewed focus on uranium and nuclear energy, which has definitely been the emerging themes for 2023 that's been great and should continue to be great for Canadian uranium producers, which is nice to see. So we'll give one gold star and maybe one negative mark there.
Thanks, Teacher Jay.
Before Craig defends himself on some of these, I just think the theme of nuclear energy, I think it's something a lot of people underappreciate as far as a very usable and efficient energy source that is effective, but also a lot cleaner than most people think it is. And I'd encourage anybody interested in it, read both Michael Schellenberger's book, I believe it's called Apocalypse Now, environmental focus, but a good chapter in there on nuclear energy, as well as Bill Gates's book on the environment and climate as well.
So I'm supposed to defend or just comment? So
no, you don't need to defend yourself. It's okay to be wrong.
No, I'll say this. The call on cryptocurrencies, I agree with you that the bulk and the leading cryptos that generate most of the attention, generate most of the inflows, they certainly outperformed. You mentioned Bitcoin, Ethereum, Solana. Those are all top performers in the crypto space. I think you said the word every other cryptocurrency, saw performance. I'll disagree with that. You actually look across the mix of all of the various cryptocurrencies, and there's probably upwards of 50 of them. It was a pretty divergent performance that you saw, Tether and Litecoin and Dogecoin and all those were all flat to negative on the year. I think part of the story, and again, it was prominent, the beginning part of 2023 was the continued fallout of FTX and Sam Bankman-Fried, who was convicted at the end of the year. He's probably not going to see the light of day. And that was more of a fraud and commingling of client assets as opposed to actual call on cryptocurrency. But I think it speaks to, again, somewhat of the black market or the gray area in which cryptos do operate. I think the debate is still out there whether if cryptocurrency is actually seen as an asset class or an actual currency. I'm probably going to resort to the former, that it's starting to be seen more as an asset class, and just in the last couple of weeks, we've seen that. I'm not going to say endorsed or approved, but you've seen some ETFs that now are trading within the US that follow the spot price of cryptocurrency. In fact, it follows the spot price of Bitcoin. And that's being supported by the Franklin Templetons, the BlackRocks, the Van Ex of the world. So it's starting to get more attention and support. And I think that if that is the trend, it's going to de-risk the regulatory environment for cryptocurrencies. The second part of that, is it seen as a currency? I still don't know how it's going to be approved, or it's going to, replace or be another form of exchange similar to the US dollar that's globally recognized. There's still lots of uncertainty how it's taxed. It's not backed by a tax base. It's not backed by a country. It's not
a productive asset at the end of the day. It's not producing earnings or profits.
No, and it's
like that.
It's so
the opposite.
Craig, what I would add there is that I think the approval in the last week or two by the SEC to allow ETFs tracking the spot price for Bitcoin maybe potentially legitimizes it. It doesn't make it any more real than it was 3 weeks ago. I think that's one of the concerns. And I think that the SEC approves products based on, lobbying by some of these companies based on demand for a product that they've been reluctant to do it. And they just put their hands down and say, okay, well, we approve it. Again, I think it partly legitimizes it, but doesn't add any more value to an asset class that is really, there's no tangible value to it, in my opinion. On the currency side of it, I think for something to be considered a currency, you have to have two things. One is be seen as a store of value, and one is a medium of exchange. And I think that's really where we're seeing cryptocurrencies, particularly Bitcoin, go, is that you could argue, like gold, it's a store of value. It's a store of value, but to some degree, it's a greater fool's theory, is that, if you to maintain value, somebody has to be able to pay you the same price, if not higher, when you look to unload that. But from a medium of exchange point of view, and that's what's needed for it to become a currency. I just could not visualize the day like gold, where you can go down the street to, I'm just looking out the window here at a Sport Chek or Lululemon or Starbucks and say, here's a crypto currency, or here's a nugget of gold to pay for my, North Face jacket. And I think that I just can't see us getting there with these cryptocurrencies. So I think from that perspective, I don't see it moving into currency world at all.
Yeah, again, you're seeing some small shifts within that space. And again, it's probably more seen as an asset class. So we'll see what 2024 brings. But for all the cryptocurrency followers and advocates of it, I would say that they have more heading into 2024 as a tailwind than certainly when they entered 2023. So
can I just add one other thing there? And I think you brought up FPX. So we entered the year, FPX had already filed for bankruptcy. I think at the time, there was some uncertainty as to what happened there, whether it was just some, sloppiness or whether it was outright fraud. And I think in court, it was determined that there was a fraud there. But I think that plus what you mentioned there, Craig, other than some of the larger cryptocurrencies, some of the smaller ones just got completely wiped out. I think it's the cautionary tale that there's been a lot of wealth that has simply evaporated as a result of speculation within cryptocurrency world. And those people that held accounts through FPX, those people that were invested in some currencies that are down 99%, I think I would just reiterate to all of our viewers there, it's an asset class, if we call it that you have to remain completely cautious of and see it as a speculative vehicle or speculation as opposed to an investment. Just my view, but I think it warrants that caution.
Yeah, I guess the second part, Jay, you mentioned renewed focus on traditional energy. I think you pretty much nailed it there with, it's still, to me, it's a supply demand equation. And, supply, as you said, in the US, I think they're now the largest producer of oil. The demand is not going away anytime soon. I continue to believe this transition to clean energy remains challenged, although I think we all support it. I'm a firm supporter of it myself, but I think what we're learning, and we've seen this with weather-related issues, even more specifically with the cold snap that we've had here in North America, that the reliance and intermittency and variability of some forms of clean energy continues to be challenged. The cost and economics of it remain challenged. The infrastructure and grid integration, whether it's solar, wind. Again, I think we're still in the early stages of that. With 80% of energy consumption relating to fossil fuels, I still think, again, it's going to take time for this transition to emerge to what some advocates are calling for.
Well, like in Alberta, they were basically begging people not to use electricity over the weekend because they were expecting intermittent outages. And so you couldn't charge your electric car, you couldn't use your appliances. And fortunately, enough people listened and they avoided the worst case scenario. But when it's -30, -40, and you can't use your space heaters, that's not a good situation to be in. So yeah, we've got a ways to go. Getting to my calls. So I called for a low volatility environment to play out. Everyone across the board, in terms of strategists, we're looking for more volatility that we saw in 2022 continue into the first half of the year, and then likely resolve itself in the latter half. We actually saw the exact opposite play out, where the first 6 months were extremely low volatility. We had very little to worry about for up until all the way into August, and then in August we saw some volatility come back to the market in a pretty pronounced way. So I don't know if I'll give myself a gold star for that, but I think
gold
just
star.
again pushing against the kind of consensus strategists that were out there is always something to kind of be aware of.
Would you not consider a year that kind of does this volatile? I think 2022 was negative, but I mean, it was like this. I mean, I would say 2022 was a negative year, but not a lot of volatility. Yes, last year was a positive year, but I actually think quite a bit of volatility last year.
Well, no. The volatility was all loaded in September, October. If you look at where the VIX was, the VIX was flat until September, basically, and then it spiked. So but then you look at 2022 is like this in terms of the VIX. So one reading, but
it depends on how you define volatility, but I'll give you that.
Yeah. VIX for all those who wonder what the VIX is, that is a 30-day measurement of expected volatility. It's an instrument that you can pull up, and as the VIX moves higher, that's the market anticipating higher levels of volatility. So
but what the VIX actually is a tool that Jay pulls out to defend his call when the market was actually volatile, and he can find a data point that maybe measures volatility, and it helps him support his call. But
okay, well, whatever you want to provide in terms of data points, I'm all ears in terms of gauging volatility. But I'll share the VIX chart with you, and we can look at it after the pod. So second call, I did technical recession and positive returns for the TSX and SPY. Well, I got the positive returns for both markets right. But, technical recession, I think it was interesting. So Canada actually produced negative second quarter GDP. We had negative third quarter GDP, which 2 quarters in a row of negative GDP typically is the historical gauge of recession. However, when we announced Q3 GDP, we revised Canadian second quarter GDP to actually be positive. So now we've got to wait for fourth quarter GDP in Canada to give us a reading on that. So we're not going to be quite able to conclude on the technical recession point. In the US, we definitely didn't have a technical recession, but definitely positive markets on both sides of the border. So
we'll give you a gold star and a silver star. How's that sound?
I'll take that. So let's talk about the year ahead. We've got 2024 on our doorstep. What do we think is going to happen? What are some bold predictions that we can put forward and hold ourselves to a year from now?
Is it fine if I make a few here? I think interest rates, I think the consensus view right now is that we're going to see some pretty good size interest rate cuts on the short end by central banks around the world. I do think that'll occur. But I think that maybe, particularly if we end up with a soft landing, that the expectation for interest rate cuts may be ahead of itself for this year. And I think as a result, we might see kind of in the middle and long end of the yield curve, interest rates move back up. We had the 10-year US Treasury top 5% last year. It's back down. It had actually fallen below 4 recently. It's back at about 4.07 this morning. I wouldn't be surprised throughout the year as the world starts to see that, hey, maybe we do see a soft landing, that 10-year yield moves back 4.5, maybe even closer to 5% again. I think that the central banks will still have inflation top of mind, even though it's not really existent right now, where I think interest rate cuts and the expectations have gotten ahead of themselves a little bit. That's one. I think geopolitically, and it goes back to what I mentioned about Hamas and Israel, we're starting to see, a lot of geopolitical tensions around the world. You're seeing Venezuela and Guyana. I think maybe it's a year that the China-Taiwan issue, I wouldn't call for an invasion of Taiwan, but where that becomes a little bit more front and center. And I think there's a lot going on in the world which spreads the U.S. very thin geopolitically and militarily, and I think that'll be a trend that continues. And I think, depending on the severity of some of those, I think those may be market moving. Politically, globally, we have, I think, 70 countries representing more than half the world's population going through elections this year. Yeah. And I think as a result, we're going to see a lot of political change. I mean, there's some countries that have elections that are not really elections where you won't see any change. The call that I'd make, and I'm just going to go out there on a limb, but in the US, which I think is the election that'll be followed the most, I'm just going to make a phone call that says I think that we'll see somebody in the White House that is not Biden or Trump. I'm not going to make a call on that, but I think the consensus right now, it's going to be a Trump-Biden election with one of them in the White House. And I'm going to say, my guess is somebody else is going to win that election. I'm probably going to be wrong with that. And the final one I think I'm going to make is Taylor Swift. What are you laughing at, Craig? But Taylor Swift, how can you make a prediction around that? I'm going to circle that back to my call on deflation. And, I think those seats here in Vancouver, Section 211, Row R, $4,000 a seat for Taylor Swift tickets. I'm gonna say that as we go through this year towards the concert later this year, that we're going to see huge deflationary pressure with Taylor Swift tickets.
Let me ask you. Let's chat about you talk about the geopolitical situation. That's one of the things that I had as kind of my non-consensus or things to look out for as well, Clark. So, and again, we didn't talk about this before this podcast, but do you think, given, and I read that as well, that you're seeing more elections at any time in history this year, and that's global. You're seeing that within Europe, North America, provincially here, BC, Saskatchewan, New Brunswick, obviously the biggest being in the US. Do you guys feel that you're going to see somewhat of a shift back to the center left from where we've been over the past few administrations here in North America? And that's going to impact a lot of the election results as we come to as we move through them here through 2024. What are you guys' thoughts on that?
I think it depends on where you look in the timing of that. I think, if you look at the Netherlands, for example, last
example, far right leaning.
Well, a movement to the right, and I think that's due to some focus on certain issues in Europe and the Netherlands. I think in the United States, on the flip side, and it goes to my call a little bit, I think that politics has just gone so far to the left and so far to the right. And I as I said, I'm probably going to be wrong on that call, but I think over time, I'll be right on that call where we see more of a focus on looking at candidates that, whether I'd be surprised to see an independent win the White House, anytime soon. But I think a candidate for either the Democrats or the Republicans that brings those parties back a little bit more center. I think that if somebody does that, they're appealing and they're successful. Not only do they maintain a lot of their own party, but they grab some of the other party as well. And that's kind of where my call comes from. Whether I'm right or wrong in this election, I think it's a force that we're going to see in the United States. I think we pretty much have to see it. And I think that's the same with some other countries as well.
Jay, what do you think there?
I mean, I think you look at who got elected down in Argentina as a pretty good indication of the appetite for change that's out there. The trajectory that a lot of countries have been on in terms of tax and spend and inflationary infrastructure is coming to an end. I think the people that are looking to their government to not necessarily solve all their problems by taxing them more and figuring out the best way to spend their money is a theme that will continue to play out in elections this year. You look at the Iowa caucuses last night. I mean, there's all of a sudden, unfortunately, I mean, it's not reviving, but there's still a strong appetite for, you know, what Trump brings to the table. And I hate to think about the next 4 years of dealing with all that madness again. But there's people want change, right? People want change right now, no matter if you're in Canada, the US, Europe. There's a strong appetite for change. And hopefully that leads to more centrist policy and politicians that are gaining victories in elections. But as we know, the pendulum often swings from one extreme to another. So it will be exciting, particularly with US elections and all the drama that surrounds them. We've got a lot of entertainment to look forward to, if anything.
Yeah, so my thoughts are, as you said, Clark, I agree with you that I think 2024 is going to be the year in which you continue to see, or you see the early stages of this political shift more from the left, and I'm going to speak to North America, to the right, whether it's in the US, whatever remains to be seen with the White House. You're seeing that within polls here in Canada. You know, the Conservatives have taken a pretty significant lead in the Liberals on the latest Ipsos polls. I think it's about a 14 or 15% point lead. And it's to your point, Jay, that people are looking for change. And I think that change is bringing things again back to the middle.
Yeah. Okay, Craig, what do you got for us? Predictions for next year?
Well, that's part of mine is the change in the political environment. I think you're going to see from an investment perspective, I think you're going to see some of the bond proxy or bond associated areas of the market look to be, you know, kind of a far better performers than they have been over the last couple of years. You know, when I talk about utilities and REITs and telcos, I think there's opportunity there. I think you got to be very selective still, in particular on the REIT side of things. But I wouldn't be surprised again if inflationary trends remain where they are, if bond yields, you know, remain within this range or where we are, and you know they don't eclipse that 5% that you referred to, Clark. And I don't think they will. I think you're going to see some of those bond proxies perform okay.
Anything else? Anything Taylor Swift related?
Taylor Swift deflation, that's my call.
Well, the only Taylor Swift thing related is I know my daughter wants to go, so I might be at the
You're hoping Clark's right.
Yeah, I'm hoping Clark right, but I might be at the mercy of what Ticketmaster or Vivid Seats or whatever is gonna ask me to pay.
Well, Jay, now it's our time to put you on the spot, moderator here. So when you get to be something other than moderator, we got to hear your predictions here.
All right, I got two predictions that I think are hopefully a little bit non-consensus, but I'm going to suggest that Canadian inflation we see a resurgent Canadian inflation environment. Going back to my comments on immigration that just don't seem to be changing, or they're kind of talking about some adjustments, but I really don't think it's ever going to happen because at the end of the day, GDP numbers are helped along by higher immigration. And the political powers that are in place point to strong GDP without handicapping that at all as a per capita number, and they point to their economic success. So they're going to keep the immigration taps open, and that's going to create continued pressures on inflation. Housing, the largest contributor to the inflation data that we all look at is housing numbers. And as long as immigration is exceeding the housing production numbers by such a wide margin, you're going to have upward pressure there. On top of that, you've got things like increased taxes. We saw, the city of Toronto announced their increased property taxes just recently with a massive jump. I think they jumped like over 10% in 1 year. Vancouver is along a similar path and expected further increases. You've got the carbon tax, which is adding to the cost of everything here in Canada. So I think we're going to see a resurging inflation number. I think the interest rate cuts that are kind of priced into the market right now don't materialize unless we see unemployment tick materially higher, which I hope doesn't happen. So the one big call I'm making is stickier Canadian inflation. I'm going to say it goes back above 5% this year for the year. Hopefully I'm wrong on that one, but that's what I'm going to put forward there. And then I'm going to suggest that we see some cracks start to emerge in these miracle weight loss drugs like Ozempic that everyone seems to be on for every ailment. In addition to weight loss, they're now being used for psychotherapy. They're being used for addiction. These magic beans just seem to be so beneficial. I can't believe they come without any side effects or consequences, or something will come up this year that takes them off their pedestal and everyone gets back to focusing on living more naturally healthy lifestyles. So couple calls there, a little off the radar.
So next year, if we see you at like 140 pounds, we shouldn't be concerned, or should we?
Yeah, exactly.
Now, Jay, you did ask a few minutes ago if I had another Taylor Swift call, and not sure if a lot of people are aware, but the phrase or the idea of a Taylor Swift economy where, she generates 10 million in revenue for herself, by show, and I think every city she goes to, it increases the economy by $70 million. So the Taylor Swift economy currently exceeds the GDP of, I think, 45 countries globally. I think it's just north of Aruba. So with my deflationary call, I'd say she'll fall back down to maybe exceeding 30, so maybe north of the GDP of Greenland would be my call.
So my last comment will be that I think this all speaks to the trends that we're seeing amongst the consumer, whether it's the debate that you continue to hear on tipping, whether it's refusal to go out and spend, a couple, $300-400 on a nice steak dinner anymore. Not refusal, but the reluctance to do that. Maybe that would be my consensus call, is a pushback by the consumer, not wanting to continue to pay, these exorbitant costs to enjoy the things that we work hard for.
I think that's a great call, and I'm completely in line with that.
For you Vancouverites, you got to have a call on the Canucks, considering as we sit here today, they're in first place in the NHL. I can't remember the last time that's happened.
I do. It was 2011.
Well, there you go.
I'll say they win the President's Cup, but I don't think they've got it to win the Stanley Cup. I don't think that's in the cards this year anyways, unless we make some big moves, but we'll see anyways. But I think I just wanted to say on the tail end of all these predictions, one thing we're pretty consistent on is the fact that short-term predictions, whether it's related to the market or the economy, really don't provide a lot of value in terms of allocating assets. And we're lamenting this on a quarterly basis in our reports that we offer to clients. We buy good businesses for the long term and not for the next 12 months. And I think that's important. And that's kind of why we approach these in jest in large part, but we'll hold ourselves to account when we come back next year and see how we all did. But definitely when we're allocating assets, we're looking at 5 and 10 years ahead, not necessarily the next 12 months. So whether Taylor Swift's tickets are $4,000 or $2,000, I don't know how much value that provides for anyone looking to make an investment, but we'll see how these all turn out 12 months from now. And with that, we'll kind of wrap up our first episode of the year. And any other comments by you guys as we close things off?
All I'll say is one thing I'm certain on is that the team here at Plena will continue to work extremely hard to challenge ourselves to provide an offering that all of our clients are looking for, to be leading class within the industry. And part of that is podcasts such as this. So that would be my prediction is again that we continue to forge forward with the overall offering that we provide to clients and ensure that it continues to be best in class. That would be my final comments.
I like that. Good optimistic point to end on.